Welcome back, investors. I put together a great show for us today. We're going to be focusing on the semiconductor industry and specifically ASML. ASML is Advanced Semiconductor Materials Lithography Holding Company. So the breakdown of the show is we're going to start off with just some general financial information here on the screen right now. We're going to then move into the news portion of how I really fell in love with this company, like what made me fall in love with this company. That's going to be the news portion. And then we're going to wrap it all up with the technical analysis portion of when to buy, when to hold, when to sell. So let's just dive right into it and start off with some basic financial information here. So I currently have the 1 week chart up, and we'll make this a little bigger for us. So overall in the week, we started off at about 668. Overall, it's fairly flat, currently at 656. It had almost a 5% increase today, so that's looking very good for this company. I want to go back a little bit. Let's just look at the year to date. So overall, we do see a downward trend, so this could be a potential buying opportunity for us. At the beginning of the year, it was nearly at $800, and it's currently at $650. So that's, what would that be, about 13% decrease right here? Or no, that'd be closer to more like 20% decrease. So this is clearly trending in the downward direction. And I even want to pull this back even further, a year. For the 1 year, it actually hit a high of almost 870. And so that is what I see in this company. I see it clearly has the potential to go to those types of heights. But overall for the year, it's fairly flat. For the 1 year chart, it was right around 600. It's currently out about 650. But once again, we have to keep in mind that there was that 5% increase today. So this company does fluctuate a little bit. So we'll keep that in mind. The other things that I want to touch on before we get to the news is this is a dividend play. So a big company like this, it's, as much as I see a growth opportunity for this company, it's also nice to have some revenue come in on a quarterly basis, currently paying a 1% dividend. The other item I want to point out is this PE ratio of 40. We just want to keep that number in mind. This number, up until recently, was around 38. So now that it's back up to 40, that just shows kind of the potential here. But let's go into the news portion and just kind of see why I do like this company so much. So just to start off, other analysts are, at least at the beginning of the year, were forecasting a price target of $9.59. So let's just round that up to 1,000 just to keep it simple. So a price target of nearly 1,000 on a stock that's right around $6.50. I mean, we're talking about a 33% return. That is phenomenal, at least in my opinion. It depends on what type of risk you're willing to take, but if we can hit those marks of roughly 1,000 by the end of the year, that's going to be a 33% return. Now, for me personally, do I believe that's going to happen this year? Based on how things are going, it's still possible, but for me, I would say it's more likely that it's going to happen in, say, like 2 years' time to get a 33% return. I think that would be great. And it really just depends on how the semiconductor industry holds up over time here. The second article I have here, and this is the article that really kind of spurred my curiosity in this company, is the ASML had a fire at its Berlin manufacturing plant. So if you scroll down a little bit, fortunately for the company, the fire was very small and contained. The fire impacted a 200 square meter portion of this 32,000 square meter Berlin site. The company has a de facto monopoly producing the advanced machines, supplying key companies like Taiwan Semiconductor Manufacturing Company and Samsung to produce cutting-edge chips. And so TSMC, or TSM for Taiwan Semiconductor Manufacturing, that's another company that I'm doing a little bit of research on, and I really like that company too, so chances are I'm going to post a video on them. Now, these two companies, TSM and Samsung, also Intel is going to get into this industry. Those two companies, at least today, are like the main foundry companies that are pumping out these chips. So those two companies, they are relying on ASML. to help them generate those chips. So just if you look at it sort of like a pyramid here, TSM and Samsung, they're like the big dogs in terms of chips. They are feeding the other companies such as AMD, NVIDIA, Qualcomm, Broadcom, all these other semiconductor companies that are in the industry. They look up to TSM and Samsung in order to get those chips. And guess who those big companies are looking up to? They're looking up to ASML. So let's just continue on with the intriguing part here. So if ASML shipments, so once again, they're just pretending hypothetically, what if this fire would have been worse than it was? And say, for example, shipments are cut by 10% due to this hypothetical fire. If key parts for its semiconductor lithography machines are made, if that 10% cut would have happened, that could temporarily reduce global supply of lithography tools by around 8.4%, as ASML has 84% of market share in that industry. So they are the clear dominant force in that industry. 84% is made up by ASML. And so now just to kind of help understand what they're actually providing. So once again, you have TSM and Samsung. They are providing these chips, and soon Intel's going to be joining that, and we're going to touch on that shortly here. But those two companies are providing the chips to the NVIDIAs, the AMDs, but what are they actually providing to those companies? So ASML they create these big time machines, and I think there's a picture, it's probably on the next screen. Let's just move to the next article. So these machines right on the screen right here, that's basically what they're producing. These big time machines that are etching into the chips, basically like the sequence or the pattern that helps these chips then basically their pathway, the chip pathway. So the lithography machine is drawing the pathway, then TSM and Samsung, they're kind of putting it up for the other companies, and then the NVIDIAs, the AMDs, they're then allocating how the chips are going to be, what their purpose is for, whether it's going to be your smartphone, whether it's the electrical vehicle, whatever the purpose of that chip is, that's when AMD and NVIDIA, they get a hold of it and they design it to their liking. So this is now the next article that helped kind of solidify why I like the company. If you're making computer chips, your clean room probably has some of ASML's lithography machines installed. The company is not only a market leader in this field, but also stands alone on the leading edge of advanced lithography systems. So when TSM is investing billions of dollars in the next generation manufacturing facilities, and Intel, which is soon to be entering the chip foundry market along with another massive infrastructure boost, ASML is definitely reaping plenty of system orders from those factory building ambitions. So TSM, and as I mentioned, if you want to watch my previous video about Intel, I go in a little more depth with this one specific topic. So Intel is looking to get into that foundry market with TSM and Samsung. And one of the things that I liked about Intel was the fact that, number one, this market of creating these chips in this manner, that's a $100 to $200 billion industry right there. And so for Intel specifically, if they can enter into that market, and even if they can just shave off, say, a 5% market share, they're immediately going to add between $5 to $10 billion to their revenue stream, just with that small portion of 5%. And we all know Intel is a very big behemoth of a company. And so chances are, just on the name recognition alone, they're going to be able to shave off, say, 10%, 20, maybe even 30% of the industry right away. And the other bonus for them is that Intel is going to be American-based. And because of that, there is the potential for other American companies to just buy them for that reason alone also. Plus, American government just likes when things are produced in America. So there's going to be the possibility that someone like NVIDIA or AMD or one of these other companies, America may give them, say, like a kickback. If you buy your chips from Intel, we're going to basically give you a refund of, say, 20%. So even though Intel doesn't have to change their price, that kickback is basically going to shave off 20%, incentivizing other companies to just stay away from the TSM, the Samsung, and buy Intel. So that's all kind of speculative at this point, but that's a piece of why I like Intel. And so now going back to ASML, it's talking about these factory building ambitions. So once again, in that previous video, I touch on how Intel is secured a deal to buy a $20 billion manufacturing company in Ohio. And I believe they already have started the process of a $20 billion manufacturing company in Arizona as well. So focusing on Intel a little bit more here, Intel, if you want to look at a possible downside for them, because that video is more about, this is the positive sides of Intel. For the negative side, this would be one right here. TSM, they're also putting in money. So they're already in that business, that foundry type business. They too are putting in massive quantities to expand their capacity. So and Samsung is too. So those two companies combined, TSM is also contributing roughly $40 billion, and I believe Samsung is also contributing $40 billion. So the fact that Intel is taking $40 billion also, and just now entering it, those two companies, TSM and Samsung, they're already established, and they're piling on an extra $40 billion. So that just kind of shows where that market is today. Chances are it's going to get saturated very quick, but you have to keep in mind these companies are adding that on today, but it's going to take, Intel's, for example, it's going to take probably 4 or 5 years for those actual plants to be up and running. And I have to imagine it's probably the same timeline for the other companies as well. So we need to keep that in mind. But at the end of the day, those three companies, in probably 4 or 5 years, they're going to need these lithography machines. And who's going to benefit from that? ASML. So this could be an excellent time to buy as we're looking into the future, seeing that these companies are expanding, they're going to need more machines, and there's also more to come with this. So carrying on with this article, we have sales added up to $6 billion in the first 3 quarters of the year. And this specifically, I just want to point out that they're talking about one specific revenue stream of theirs, because this company, off the top of my head, I want to say they're making closer to like $18 billion. I need to fact check that, but this is only a portion of their revenue. But that portion saw a 40% constant currency increase over the same period of 2020. Earnings soared 90% higher over the same period. At the same time, ASML has a backlog of unfulfilled system orders worth $21.8 billion, which works out to a 172% year-over-year increase. So once again, this just shows the demand that ASML is in. They not only are meeting production quotas and hitting their marks and outproducing previous quarters, previous years, they also have $21.8 billion in back orders. So let's just keep going down. The back-ordered systems should keep the revenue streams flowing for at least a couple years. So we're not talking about just 1 year. This is multiple years, and you have to imagine these orders are going to keep piling up. So you may say that's not good, because that just means their competitors are going to claw away market share, but they are so dominant in this field, and we're going to touch on how, or I should say why they're so dominant in this field in just a minute. But they already have so much of the market share, it's not going anywhere. It's not going anywhere. And so if you remember that PE ratio of roughly 40 that we touched on, you can see this article was published a little while ago, closer to the beginning of the year. So shares are trading at 49 times. So at one point it was at 49. So it's currently at 40. You're seeing the potential here that it could go back up to close to 50, and it wouldn't even be that difficult. So now let's go into these 4 green flags here. So this is just more of why I fell in love with them. So last year, shares of the Dutch semiconductor equipment maker, ASML, soared 63% as the global chip shortage highlighted the importance of its extreme ultraviolet lithography systems. Now this is like the main thing. This is, I mean, they were already solid, and then this just put them on the next level for me. So these extreme ultraviolet lithography systems, that's EUV, they are the only producers of them. And this is basically like the next level in terms of chip designing. So there was like, I can't, maybe it touches on this, but there's, whatever the older design method was, they have now improved upon it. And they are the only ones. So let's just keep reading here. These massive systems, which only ASML produces, cost about $150 million each and are used to etch the circuit patterns onto silicon wafers. That's what I was trying to explain earlier. The world's top foundries, including TSM, Samsung, and Intel, all use ASML's EUV systems to manufacture their smallest and densest chips. So once again, there's those three companies. I know they mentioned Intel. They're not there yet. I mean, I guess they are partially because they do have some foundries that they do in-house, but they're now going to actually take on the broader market. They're going to try to create something for the other companies of the world. And so they're really going to push ASML's profits up because they're not going to focus on just in-house anymore. They're going to go beyond that. And you know that based on that $40 billion investment to build these other manufacturing plants in Ohio and Arizona. So continuing along here, its dominance of the broader market for older lithography systems made it a linchpin of the global semiconductor market and a top beneficiary of the global chip shortage. So you might be saying, maybe they've already reached that peak, and they probably have, because right down here, it's not highlighted, but at its highest point, they were at 57 times earnings. And so I don't know if they'll ever get to that point again, but I can tell you that they are going to continue their revenue growing. So even if they touch that again, that would be an excellent time to sell. Just keeping that in mind. So if they ever hit that 57 PE ratio again, that's going to be a signal to us that we want to actually pull out at that time. Because honestly, I would say between a 40 to 45 is what this company should do. And long term, I would like to hold this company for a long time. It's just, there's definitely, I think the quote is something like, you want to buy the dips but sell the rips, and so this would be a rip in situation. If it exceeds 50, say 55, yeah, that's an extreme rip for a company like this, and you want to sell at that point knowing that it's most likely going to come back down to probably that 40 PE range, and that's when you would buy back in, buying the dip. So carrying on here, so the threat of higher interest rates, which need to kick in to tame inflation, also cause investors to rotate toward more conservative investments. Those headwinds caused ASML stock price to drop nearly 30% from its all-time high. So that one, I'm just very surprised because a company of this size and a dividend company at that, I'm just surprised this isn't considered a conservative investment, especially considering that they own 84% of their market. I mean, I don't know how much more conservative you could be. But once again, I realize this company did rip off a great gain, and so people just wanted to pull that back a little bit because semiconductors can be cyclical, and we'll actually touch on that here just now. So in terms of the revenue growth, so based on this little chart, let's blow that up a little bit. So you can see this little dip here in 2019, and that's kind of the cyclical pattern here that we're talking about. And to me, that just kind of shows the power of this company, is that even in a slower period, they still grew at 8% revenue. I mean, that's pretty good. I mean, considering that, but once again, so they don't consider this a conservative company, which still kind of baffles me, but you're seeing the growth here in terms of revenue. If we were to average these numbers, that's probably like a 20 to 25% year-over-year growth. And just going in 5 years, so back in 2017, they had 9.1 billion. All of a sudden in 2021, they're at double, 18.6. And so there you go. There's that $18.6 billion. So that's $6 billion. That was just one specific line of revenue. Maybe that was their one lithography design type of machine, or maybe it was the EUV type. I'm not sure. When we look into the financials, we'll be able to figure that out. So the market demand for lithography machines ebbs and flows, but ASML usually still grows through cyclical slowdowns. And you're seeing that 33, 22, 8, but then it bounces up 18, 33. So it flows like this constantly. ASML should be kind of immune to this though. ASML's business is cyclical, but its current growth cycle won't cool off until TSM, Samsung, Intel, and the other foundries install more of its systems to resolve the ongoing chip shortage. Last month, Intel CEO Pat Gelsinger predicted the shortage would last until at least 2023. So we have a full year until we're likely going to catch up. And I'm imagining it's probably going to go beyond that. And we're going to touch on how, at least for ASML specifically, it's not going to be slowing down anytime soon. And so to wrap up that one line, so therefore analysts still expect ASML's revenues to rise 19% in 2022 and 12% in 2023. And I have to imagine that 12% is actually conservative. So moving on here, ASML has constantly expanded margins, so plenty of pricing power in the high-end lithography market because it doesn't face any meaningful competitors. Once again, 84% of the market share in a booming industry. We love this company for that. It's too expensive for new companies to enter the market, and it's too technically difficult for chip makers to develop their own EUV systems, a process that ASML has perfected over the past 3 decades. And so now we just want to touch upon the gross margin percentage. And this is huge. So just 5 years ago, once again, they were at about 45%. Over these past 5 years, they have surpassed that 50% mark. And I don't care what the company is, if you can pass a 50% gross margin, you're doing something right. And based on their explanation, that's why they're able to do this. They have that pricing power, they're able to push up the price, and the other people can't really do anything about it because where are they going to go? They have, not only do they have basically the only machine, but they have the best machine too. And these companies, known for perfection in this industry, they want the best. The NVIDIAs, they're known for being the best. AMD, the best. They want this type of company. So let's just scroll out a little bit. And so this next point, this is why I'm saying this isn't going to stop anytime soon. So it will also sell its newer high NA EUV systems, which will be used to manufacture the world's smallest 3 nanometer and 2 nanometer chips from 2022 to 2025 at even higher margins. That's why analysts expect ASML's earnings per share to grow 22% in 2022 and increase another 17% in 2023. So right now, the AMDs, the NVIDIAs, they're all bragging about how they have a 5 nanometer chip, a 7 nanometer chip, and they're like the best. They are literally the best that the world has right now. And they're talking about they need more of ASML's equipment so that they can produce more of that type of chip. Well, pretty soon in 2022, this year, they're saying we're going to come out with the next best thing. That 2 nanometer chip that I believe AMD's touched upon, and probably NVIDIA's touched upon it too. They are going to be ramping up the equipment to get that type of advancement out, which the smaller the chip, basically, it's the more efficient the design is, and therefore it saves power, saves energy, and it's just overall greater for the machine. So let's go on to the next piece. So last September, ASML set new long-term growth targets during its Investor Day presentation. It expects to generate 33.9 billion in American dollars in revenue in 2025. So once again, they are nearly doubling revenue in, let's scroll back up. Let's see. So they're at 18, and this is in euros, 18 billion in euros. And they're going to jump it up to about 30. So not quite doubling their revenue, but just in 4 years, they are nearly doubling their revenue. That is what they're projecting, and we have to imagine that that's on the conservative side. We'll see how it plays out. I do believe it's going to be greater than that, just based on all these reasons that we've gone through so far. And the other contributor, which I have to imagine this is kind of included in that figure, but ASML also expects its gross margin to expand to 54 to 56% in 2025. So it's just going to keep inching that gross margin up. It would be great if it can get up to that 60%. That's when things would just I mean, they'll be made of money at that point. That's also significantly higher than its previous gross margin guidance of 50%. So their guidance before 50%, they're saying it's going to be higher. So after its recent pullback, it's now trading at 35. So at one point it was at 35. It's kind of gone up. Like I said, before this week started, it was about 38, and it probably just cracked the 40s today based on that 5% push. It might pull back a little bit. We'll kind of see how things are going. It really just depends on how the market foresees these interest rate hikes and this war with Ukraine and Russia, just how things will kind of play out. The last point here before we move to the technical analysis is ASML also expected to generate double-digit revenue and earnings growth for the foreseeable future. So they're talking beyond 2025. We're going to be seeing revenue like this. So that, for all those reasons, that's why I like this company. That's why I see them as a growth play. I see them as a strong, just solid, continue to climb, let's buy the dip, sell the rip type company. So let's move on to technical analysis. So I already drew in a couple lines here for us just to save everyone some time. So I drew in these darker lines as more, for this company, I'm actually going to pull it out a little bit. So if we pull out just a little bit, you can see this company's been on a tear ever since right around the COVID pandemic started, right around that March 2020. They have just been on a huge incline here. So let's just draw in a little line here just to show. I mean, they have just been on a massive trend, going from roughly 200, we'll actually give it a little more precise, $190 all the way up to almost $900. You could have 5x'd your money in just about 2-year time. Less than 2 years, you could have 5x'd if you would have bought and sold at the perfect times. But because of that type of rip that they had here, there's not too much support. So let's just zoom in a little bit here once again. So I did draw in, what's going on here? Where's the lines at? Here we go. Okay, so in terms of support, we don't have too much. So I did draw this one line in here. We can make that one a little bit thicker for us. So we're in between this little gap here. So the lines currently are between roughly 600 and 670, and currently it's at 656. So right now, I would say this is a holding time. If we can trace back closer to 601, I would say anywhere between like 620, 601, that'd be a decent time to buy because that would be at a low point. Of course, if it were to slice through that type of mark, our next period would be all the way back down to 520. But I do see 600 roughly a decent support line, just because if we zoom in a little bit here, you can see it was a peak a little bit ago back in, say, February of last year. That was a support line, and then once we passed it, you can see we dropped down right almost on the spot of 600, but every time we dropped, we bumped back up. So there's a little bit of support there, and this is a weekly chart, by the way. And so you can even see recently we came fairly close, right around like 615, and sure enough, we popped right back up. And so we're now right in that little window. And so if you're more of like a bullish type style of investor, maybe you want to wait until we pass that 670 line. If we can pass that, then we don't know. We could all of a sudden shoot back off to 900. I'm a little bit hesitant of that. I do believe it will happen in the future. It's just, will it happen short term? I have my doubts about that. But if you're on the bullish side, that would be a decent time to buy right around, if we can pass that 670, get closer to say 690, that would be a show of support that, okay, it may start running again. But if you're more like me on the conservative side, I would say if this can pull back closer to say 615, somewhere in that range, because chances are it's not going to get exactly on 600, but if it can get closer to it, that would be a decent time to buy in my opinion. And of course, if it goes below that line, then our next slight level of support is right around like say 520. And so that would be the next opportunity to buy if it goes below that 600. So just keep that in mind. And then I do have this very light line here at 400. I can't imagine it would drop all the way this low, but I drew this line in here because that was we had a decent amount of support back here in 2020 between July and about November. We had a couple tops right at that 400 mark. I can't imagine it going back to those levels anytime soon, if ever again, unless maybe like a stock split. But so in terms of today, I would say it's probably just a hold type area. Once again, if we can trace back close to 600, yeah, I'd be looking to buy. If it can go past that 670 mark, that could be a sign that we're going to shoot off again. It really just depends on the type of investor you are and how you want to play this out. Otherwise, I hope you enjoyed this video. Please like, subscribe. I also have a Webull link in the description. If you want to click that, if you don't have an account already, you can get 2 free stocks just for signing up and investing, I believe, any dollar amount just by using that link below. So I hope you enjoyed this and have a great day. Bye.